Good morning. This is George Kachuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. Here we are entering the second week in July. The equity markets are a little soft, but basically the uptrend in the equity markets continues to the upside. Now, of course, we may get a pullback here and there, but generally the trend is pretty strong. Looking underneath the hood, everything keeps firing on all cylinders. Some of the things we talked about last week, sort of called the peripheral indicators, meaning the VIX being low, indicating complacency, not so good for the market. But anyways, the market continues to lead. And not surprisingly, if you look at a lot of the economic data over the last few quarters, it keeps improving. I'm talking about the ISM manufacturing, the ISM service index. If you look at non-farm payrolls, you look at all the housing data, pretty much it's been supporting the market's move. Now we're going to start earnings seasons in a little while, so we just have to keep an eye out for that. So with the market improving, we continue to buy growth stocks as they break out of sound consolidations. So today, let me tell you about a stock we're acquiring over the last few days. It's Jazz Pharmaceuticals. The symbol is JAZZ. You might have heard me mention this stock numerous times because it's had a great run from the 2009 lows of 80 cents a share up to $176 in February and started to correct. So it pretty much has been correcting since February down to the 120 level, where it bounced off its 200-day moving average after the last earnings report. And last Thursday, it broke past a 156.40 buy point from a classic couplet handle base. Now, the nice thing about this structure is it's been pretty sloppy on the left side, which is not a good thing, but on the right side, as it's been coming up, we've been seeing a lot of solid accumulation, a lot of tightness in that structure, showing that there's some true accumulation going on in the stock. Now this morning it's bouncing around anywhere between 163 and 165. So for us, the buy point is from the pivot, 156.44, up to 165. We don't chase it past that, so it would be about 5% past the pivot point. Now Jazz is a specialty drug maker. Their main drug is Xyrem. It's a drug for narcolepsy. They get about 2/3 of their earnings and revenue from that. However, they keep expanding into other areas, and they have a few other drugs going on now. They just acquired Gentium, an Italian drug maker, and they continue to do this kind of thing. Management seems to be able to fire on all cylinders and be able to make those acquisitions. Now, its 5-year growth rate is about 79% in terms of earnings. Now, for the next 3 quarters, analysts are expecting earnings to keep growing over the 30% mark. Now, also for the next 3 years, this year analysts expect earnings to grow 28%, 25% 2015, and about 21% in 2016, where they're looking for a little over $12, $12.28 per share. Revenues are pretty much also growing in line. So it's a technical buy of a classic couplet handle base. It's a second stage base, so it's not extended. It gave us a nice correction, give us another chance to go into it. So consult your financial advisor if this trade is for you. If you do decide to play it, use a customary 8% to 10% stop, no more than that, and position size accordingly. Now continue to monitor the markets. As always, that price and volume be your guide. That'll let you know what you should be doing in this market. This is George Kachuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago.